The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Steve, Pete. Paddy's not here. Where's Paddy? He's at the airport, isn't he?
Yeah. He's
What's
flying.
he doing? Didn't he go on holidays with a lady? Yeah, with a little lady. I don't want to say little. I know how little she is, you know.
I think it was a medium-sized man.
Oh, okay. Easy mistake to make. Wearing a dress. Yeah.
Yeah.
So Paddy said he's going through security in the airport. He may join. That's going to be annoying, distracting. Distracting Steve, you know, in the car, talking about Back to the Future. How was that, Steve?
Oh, yeah.
It's fantastic.
Okay.
Steve review, fantastic. 5 stars, fantastic. Steve Martin, Back to the Future.
I think if you have an appreciation for the Back to the Future film, I think you will love it. If you don't, you probably wouldn't like it. But I think that's the same with any musical that's come from a film.
Yeah. I can sense people now listening to this thinking, what are you doing? Talking about what matters. Talk about what happened this week.
Nothing's really happened in the market this week.
No, I know, but do you know what? I've got to say, part of me is putting it off because I felt mentally battered and bruised this week. Honestly, I felt like Anthony Joshua looked after the Usyk defeat on the weekend at Ritchie. I found it really hard. But by the way, let me just say one thing, right? To all the trolls who blame me for POLAREAN's share price fall, you may be getting confused. I do not work for the FDA, okay? I did not stop the approval. The share price fall wasn't my fault, okay?
No.
I mean, I don't work for the FDA. Not that we're Jeff and Chuck, and not with these guys, okay? There's a lot of people smarter than me that thought this was nailed on, okay? We were all mistaken. We underestimated the risk. And I did write on Twitter, I said, because I get a lot of this. I mean, the thing is, if you blame other people, in life generally, if you blame anyone for anything else, it's obviously your fault, you'll not be a winner in life anyway. And so when I said trolls, right, become less relevant the less you engage with them, especially on social media. Don't engage. Ignore.
What kind of messages you been getting?
Yeah, just idiots. I'd say ignore them. Ignore them completely, right? And they're effectively shouting angry abuse at themselves, which is what they were doing anyway, but they just needed someone to blame, you know? They can't face it. Turn it to yourself, look in the mirror, you'll become a better person for accepting that you're the one with the password to your stockbroker account that bought the shares. But I don't work for the FDA, full stop, all right?
Yeah, I mean, this week... it
was brutal.
Well, exactly. I was going to say, it was like no other, and Wednesday in particular, in all our years of doing this, it was definitely the biggest.
Do you know what? I genuinely think, do you know what? I said to people, and a lot of people started newish to investing, joined the Share Pickers Investment Club. They sort of joined in, the first quarter was very good, wasn't very bullish off the pandemic. You know, Paddy was saying, whatever, so many sell-offs. Yeah, I know, but it's a pandemic year, and I keep likening it to dropping a massive boulder in a pond. You know, it went down very quick. The water comes back up very quick. But there's lots of ripples. There's lots of volatility that comes after that kind of shock and awe. And I've got to say to people who are new to investing, if you stick through this year, you've earned your badge. You really have, because this year has been, Wednesday especially. And I think, why was it so brutal? First of all, bad, unexpected news released by POLAREAN midday on a very, very bad day. Everything was selling off anyway. And then you drop that into the market right in the middle of the day. You think, oh my God, sell!
I'm calling it Brown Wednesday.
Yeah.
Because it was in free fall already, wasn't it? Right. I was like, I had a glance at my portfolio at lunchtime. Oh, that's a lot of red. And
then to add to it, POLAREAN, you timed it worse than that.
Yeah. Oh, you think that's bad? Wait for this RNS.
Yeah. You ain't seen nothing yet. You wait. Richard said, "Oh, you think you're panicking now? What's this?" Because the thing is, you know what happened though? And I said, the RNS was really doing trading hours. You know, I mean, people sort of read the headline. It was dropping already because people just panicking because the news should have been out 7 a.m. that day. Pretty much. I think people were panic selling anyway. And then you see the headline. Complete response letter. You think, what? What does that mean? Does that mean it's approval? And I think, no, hang on. It's not, if it was approval, surely they would say approval in the headline. Approval. Yes, we got it. Or thumbs up. That didn't happen. So people just started selling straight away. And you mentioned there on WhatsApp, but I guess a lot of automated stops compounded things.
Well, absolutely. I guess stops. And also, the other thing, it's so easy to sell these days, isn't it, with apps and everything else?
Yeah, but I like that. I thought, you're right there. The apps are so easy to sell. But I thought, what do you do then? Just take telephone orders. Sorry, stocks are falling too far. Yeah. Any stock falling more than 30%, it's only telephone orders.
Yeah, exactly. Well, press 1. Press 1 to buy a little bit. Press 2 to buy a bit more. All the way down to like press 10 if you're thinking about maybe selling something.
And if you get through, I think there should be a service like that. Stop knee-jerk reactions. You get through. Press 1001 if you really want to sell, and you get through to someone. Right? Well, what are you thinking of selling? Quick! I just want to sell it. No, what is it? Have you seen? Actually, it's very good. Zootropolis cartoon. They got the DVLA in America, basically the cop and this fox got the DVLA, and in there they've got sloths working behind the counter, and they're so slow typing. And she said, and the copper says, walks in and says, "Yeah, can you do a car check on me, please? The license plate is FD3 14567." They go, F D 14557. One. He said, "I'm trying to sell a stock." And then halfway through, right, when he's typing out this thing, the fox messing around says, "Hey, Flash," because he's called Flash. "Do you want to hear a joke?" And she goes, "No, don't tell him a joke." He said, "What do you call a camel with 3 humps?" And he said, "I don't know. What do you call?" She goes, "A camel with 3 humps." Trust me. And then he tells him the joke, and the smile is brilliant. It's worth looking at that. It's just a slow smile. He said, "Pregnant." And literally the smile goes really slowly. Yeah. And then he turns around and he goes, "Priscilla." And there's another sloth next door to him. "What do you call?" "No, please!" And it's just because she's in a rush. But you imagine that on a stockbroking line. Exactly. You could sign up to that service. Because if you sold on that day, you've probably lost money now. That's it, because the bounce was there.
This is the thing, isn't it? And I know, I did nothing. I don't think any of you guys did anything.
No.
And it happened so quickly.
Balls of steel!
I was busy at work anyway, and I was like, wow. And I looked at my portfolio and I thought, blimey, that is the most money I've lost in 15 minutes in my life.
Do you know what? I've got to say.
That's a lot of money.
Shall I tell you the number that my portfolio was down on Wednesday?
Oh, I can't imagine.
No, do you know what? That was the one thing that was making me feel a little bit better myself, that I wasn't probably losing the most amount of money.
It was the most value ever in one day.
It's all relative, but yes.
400k.
Wow.
Ooh.
Wow.
I thought, shit.
Yeah.
But do you know what? But do you know what though? When it was going down, weirdly, this isn't the worst I've ever felt about losing money. I think I felt worse on other stocks where I know you hear some news, you go, "I'm never, ever, ever going to get that money back. I've just lost that money." Whereas there's a little part of me kind of just going, there's quite a good chance that this is going to come back and the money's not gone. In fact, I was thinking about being a dead investor.
What?
Yeah,
being passive.
Being passive.
You just think if you chances are you would have missed all this. You could have come back to it, or you went away for a couple of years. You probably wouldn't even notice anything would have happened.
I think this is where we set up. I think this is where we set up the slow dealing service. The slow dealing share shop. So you call them. And what is it you'd like to sell, sir? POLAREAN. It's down 60%. Sell it now. Sell.
Quick, sell.
POLAREAN.
How do you spell that?
POLAREAN. What do they do? They're a med tech device that had knocked back from the FDA. Sell it now. Oh, that's interesting. POLAREAN. I mean, why are you selling it? He said, "Don't worry about that." They couldn't bounce. And just have someone argue with you for half an hour, And then in that time, have a think about it, sir. Come back. I don't want to take your sell right now. Have a think about it. Come back. Sell the stock, please. No, I've paid you for this service. Sell the stock. Call me back tomorrow. Because there are lots of people who are sold on that panic. And now, look at the last few days.
Yeah, no, it's been good. It's recovered, isn't it, nicely.
20% on Friday. It was like 10% the day before, 9% the day before, up. And I did say to everyone, I did a webinar on the Wednesday, and I said, I'm doing nothing. The best thing to do, if I learned one thing, is that in massive times of fear, if anything, what you want to do is hit that sell button. But that's the psychology of the market. What you should be doing is buying. Because everyone, especially a general sell-off, you should be buying.
I've put, I feel like I've put enough money in there that I don't want to put any more in, even though it did drop. because I have actually, I got down to being at a loss, but when it dipped down, but it dipped down. But now it's recovered, and I'm nicely up again.
Well, I don't know if you heard what Vadim said, which is quite true. And I said, do you know, oddly, we're now back to a year ago, which is when they submitted the FDA submission, and then Vadim said, but no, but the difference is they've got more cash, they're a more advanced company, they've got a lot more sort of research papers out there. And
I have a question actually. Obviously, the numbers flying around on this one was there was a 90% chance that it would pass.
Yeah.
I'm not sure if I've read this off our chat rooms. I'm not sure if this is real or not. But they said now it's only a 70% chance.
No, they've changed. No, I don't understand. Yeah. Basically, because of that, they couldn't put a 90% chance again. But Vadim explained that. He said, but the thing is,
surely there's a better chance.
That's what I thought. Yeah, but Vadim said, the reason why they give it 90%, it's a well-known metric because if you go into clinical trials, right? Now that's why it's very high risk going in. And I say I invested in POLAREAN before they got phase 3. So that was a lot higher risk back then. But literally, especially with oncology, cancer drugs and stuff, to get, I think 70% of companies who start, phase 1 don't get through to the end, don't get to commercialization. And then as you get phase 1, phase 2, and I think if you pass phase 3, the chances are getting FDA approval are 90% because you've gone through all the safety.
That's a general stats then.
Yeah, safety, efficacy, right. And it's proven on every metric. So this wasn't expected at all. But there's a broken note come out, and I think they've just tried to calm it down a bit, saying we still give a pound because we didn't see this happening. This was unexpected. We don't know as yet what the issues are, but they're not clinical. And Richard has said this, they're not clinical. They're not safety and they're not efficacy, which is that is the big problem. If you have a complete response letter and literally, your clinical trials, which is not going to happen because the FDA was in collaboration with that all along, and they weren't on the manufacturing side, But I'm just thinking, it's manufacturing. So it's something to do with the manufacturers of the polarizers. I just imagine, I was just thinking, right, of Richard going livid because he didn't expect it, and just calling you'd want to call the FDA, wouldn't you? And saying, what's going on? Right, I'm calling the FDA. FDA. Can I speak to Jeff, please? Put me through. Jeff at the FDA. Jeff, it's Richard. Richard POLAREAN. Oh, hi, Richard. How you doing? So what am I doing? You've knocked us back on the manufacturing. Oh, yeah. We went to see your lasers, your polarizers. Your things. And we went to your lockup, when you keep the lasers, polarizers. Yeah, that's it. And I got to tell you, Richard, we had a problem getting in to the lockup, the combination lock, It was 4 numbers there on the combination lock, and the fourth one was quite rusty. We couldn't get in. Anyway, Chuck was there with his WD-40, so we got in there, all good. So what's wrong with the polarizers? No, nothing wrong with the polarizers, it's the lock. Rusty and faulty, we couldn't get in for half an hour. So you knocked us back on the lock. Yep. Gotta change the lock, Richie. Gotta change the lock. Me and Chuck couldn't get in there for half an hour. What if someone needs a laser urgently? So, because do you know what? This is what, and it's come to this now because there's a member in the chat room. That lock, Richie, that last combination wouldn't budge for half an hour. But he said the guy in the membership room there said he had a chat with a really good friend of his. Now his mate is a executive director of a listed medical device company, right? And he told him that POLAREAN just had a CRL, a complete response letter from the FDA, and the share price was dropped like 60%. And the guy asked about the response letter, and then he said, "Oh, manufacturing, that's nothing." He said, "We have that all the time. Sometimes your manufacturer is just missing an ISO number. ISO number accreditation. Sometimes their health and safety in the plant is not to scratch. Sometimes their equipment needs upgrading. Sometimes you just have to swap the manufacturer. It's a pain, but you have to do it, Yep. But he said he's been there in that company for 20 years, and he feels that they're constantly going through FDA approval processes. And he said if the issues are not clinical or safety, then nothing is standing in the way except for a bit of time and a bit of money. He said they've been knocked back loads on small things you'd never even realised they go into facilities and they check things out, and it can be something literally like that, accreditation.
Yeah. And the thing with all regulators in all industries is they're not in a rush, are they? They're going to do it properly in their heads to make sure it's 100%, and everything's got to tick all of the boxes, every single last box before they, give approval to things and whatever. And all jokes aside, I know we've talked about, Jeff and Chuck shorting the stock or whatever, but, no, they are what they are. There's a lot of conspiracy theories flying around. I've seen a few, about how the FDA is funded.
Yeah,
and all that.
Conspiracies are more interesting than the real thing, Sadly, it's probably just a boring... and
it's really boring.
Yeah, but that guy said, he explained to him about it, and he said, sounds like a buy. That guy from the medical device.
Yeah, right, exactly.
But, and... yeah, so in fact, I talked to I tell you who it was, James from TRUFIN, right? Now they're a bank they've spun out a while back, but they were applying for a banking license, okay? And he said we went through a long time. These banking licenses take a long time, take a lot of money. There's a lot of stuff, red tape you have to go through, all the regulation and all this stuff, compliance and all that. It just takes ages, takes a lot of money. And we were in, constant communications with the banking regulatory authority and all that. And then we thought it was all good to go. We were really excited about it. And they knocked us back on something really small. And I said, well, why didn't you just tell us about that? And to them, it wasn't a big deal. They just said, well, no, it's not a problem. Just sort that out and resubmit. I said, yeah, but you've taken the share prices and the stock has gone down. It's like, it's a big problem for us, But these big regulators, it's not that big a deal,
Yeah, absolutely.
Shocking, isn't it?
Yeah. So what you got to think of that is, I did this webinar, and what has changed here, right?
Yeah.
And has anything changed? All that's changed for me, as far as I can see at the moment, is the time to the market. And that, of course, will put people off anyway. And they'll say, I'm not waiting for another year, whatever it's going to be. But I think Vadim was saying maximum a year. If they can get it through properly, could do it within 6 months maybe. But and what's not changed is the size of the opportunity, the market size, and the technology is amazing. And then at the end of the day, I said, what do we learn from this? And essentially, I said quite a few things. But first of all, binary plays are binary plays, And when your commercial success relies on the decision from a regulator, a third party like that, then you've got to take some off the table. Because you never know what could happen. You can always get back in, and it doesn't matter if it rises afterwards anyway. There's always drops in the markets always sells off. There's always opportunity to buy more on dips all the time. And in fact, I've even been thinking about adjusting my cash position because we're in the nature of investing in microcap startup companies. If you want that growth, it's not going to be a smooth path, and you're going to have knockbacks, Like TRUFIN had a knockback on their interims the other day. That was a top-up opportunity in my mind. But I was all in, pretty much. I thought, I wish I could have bought some more there on the top of it. But so I just think it's, do you know what's interesting? The dynamic between the bullishness of new buyers now in POLAREAN who felt they'd missed the opportunity previously. And the bearishness of existing holders. In fact, that's seeping away now because you look at it, the people who watch POLAREAN rise and rise and were scared of getting because it's rising, they just think now, well, it's a small setback, isn't it? And they're looking at it because they haven't been burnt. Now, but the existing holders thinking, how big a deal is this? Start worrying. And I said, this is because existing holders experience that fear close up on Wednesday when that dropped like a maniac. And obviously new buyers, they've probably had this in the past, but fear, it wanes over time. It's like pain with pregnancy. You ask any woman straight after they give birth, they will have another kid in their life. They go, I'm not having another kid, no way. And then all of a sudden, about a few months down the line, we should have another kid, So fear.
It's like drinking, isn't it? The next morning, I'm never drinking again. 2 days later, you're drinking again.
Well, when that happened, when I read that at RNS, right, and I thought, what's going on here? And it's dropping like a maniac. I literally, after I saw the share price drop, I walked around the house like a zombie. I mean, I just kept reading the RNS thinking, is there anything in there that says they've sort of been approved, but with a condition? Have I missed something? And I said, no, it's not, is it? So they have not been approved. And I couldn't get it in my head.
I know. It was a bit, like I said earlier, like that 15-minute was like, wow, that's a lot of money that's just suddenly disappeared out of my portfolio. And it was a bit of a hit. But, and I think on our WhatsApp group, we're just like, just do nothing, don't leave it. And I'm really happy that we stuck to that, and I stuck to that because it's obviously recovered. The thing is, though, and you look back and you go, what would you do differently? I'm not sure I would do anything differently. Like, you could think, I could put a stop loss in or whatever, but no, why? You got to
and also people who are selling before, like before it. I was kind of like, what are you doing that for? What's the point in selling right up until before? Obviously, in future, they would have done well out of it, but at the same time, it's like, what's the point?
No, in future, I will change, and I've written that on the day. I think you've got to learn from these lessons, and on the day I've updated my schedule strategy, and it was sort of in there. Oddly, I said I wouldn't have bought POLAREAN based on my current, schedule strategy, because it wasn't, it didn't have revenue. The company have not announced a road path to profitability. The brokers have got forecasts, of course. That's not the same. The company, they were never sort of 3 times, their EV, their valuation was never 3 times their sales. So they were always quite highly valued. Yeah. But I saw the potential there anyway. But now I will, the thing is, if it's a binary play where the odds are against, I wouldn't even get involved. But this binary play here, like I said, 90% chance past everything. And even so, there's always something can go wrong.
So what would you have done? What would you have done?
I would have taken some off. Yeah, and I'll do it next time as well.
You'd have done some off before the decision?
Yeah. Because and now I'll do it next time as well. When we get to that point now, we get the FDA approval and let it rise and get towards that. Everything it's going to rise. And I said what's going to happen now? Don't sell now, because stocks and shares are about supply and demand. Simple as that. Now when you had that news come in, the supply of shares getting chucked into the market to sell was phenomenal. I mean, I think the average daily volume on POLAREAN was like about 800,000, and then it was 12 million on that day. So you're talking like 15 times volume. So there was a lot of people selling. So the sellers are like, don't get involved in that. If you're going to do anything, you should go against the market and buy. But you shouldn't be jumping into sell. You are literally running towards the end of the Titanic with everyone else trying to get the door and it's sinking. It's too late. It's too late. Absolutely. It'll bounce.
So what proportion of your holding would you have sold?
About, I think, I wouldn't have sold half. I'd have sold maybe... I don't know. We're looking at the reward there and the thing. Maybe 20%.
Yeah, because this is the thing, right? If it had gone the other way and it had been a 20% rise or a 30% rise or a 60% rise, a crazy rise, you'd be like, oh, wish I hadn't sold that 20%.
Well, I know I'd have to think about it, but the pain of the drop though is, listen, drops. People find twice as much pain from drops as they do pleasure from gains and the equivalent gain. So, I'm happy for it to rise. I'd still have stock in there. I'm happy to have that. But it's the greed that we thought, just keep it all in. There's no risk there. Yeah. I would de-risk again because... I'm going to do it next time. Listen,
okay.
I explained the dynamic. I said to people, listen, it may not feel like it now. It's very painful on Wednesday, the webinar. It may not feel like it now. Don't do anything, because normally when you get these kind of fall-offs, it does bounce. And if you're going to, and what's going to happen is this: the sell pressure will reduce, and people will start buying. And in fact, at the time, you think no one's going to buy this. They haven't got FDA approval now, but you realise, hang on, it's a minor as far as we can work out. It's not a big problem. FDA, sort of knockback.
And they've got $38 million in the bank.
Yeah. So they can go through this again. So then people started realising though this. And buyers started coming in. The sales pressure started easing off. The buy pressure started coming in. So that's why you've seen people think, hang on a second, it's not that big a problem. So people start coming, I've got a second chance at this. I missed this first time round POLAREAN. I'm going to get in. So the first time, you don't sell it, then when the big fall off happens, because it's just nuts. It's gone crazy. You just got to let it go.
Why do you think we're here from Richards to know a little bit more detail of what was in the letter?
Yeah, well, I'm just going to... Well, say one thing before I go to Richard, because I've had emails with him trying to get on. But that loss, right, when you suffer a loss like that, it is like grief, because you're losing money, you're losing value, And I looked up the 5 stages of grief, and you just get denial first of all. Oh, that's not happening. No way. And then you get a bit of anger, thinking, what the F... Why is the FD knocked that back? And all that stuff. And then you sort of get what's called a bargaining. You sort of try and reason it through, And then you get a bit of depression. You think, oh, no. And then you get a bit of acceptance. And then you move on then. And you go through that. But, of course, some people did buy at the height of fear. And do you know, I did say, we can stand around, worrying and trying to work out the unknowns. But the unknowns produce the fear that creates the opportunity. And like, if you look at the dash for cash, when everyone was scared, how fast is the market falling? We know now... Looking back in hindsight, that was an opportunity, and we know now, with POLAREAN, that if you scaled in slowly there on the way down there when it dropped, because it dropped very quickly, just start scaling in, you'd be fine by now. You'd have decent.
Oh yeah. Oh, absolutely. I mean, I think it dropped to 38p, didn't it? And it's back up mid-50s now. So people have done probably some ballsy traders have done probably really well out of it. So good on them. Well done. But in terms of binary plays, though, as well, like I'm not dismissing them at all. Because that's where the excitement comes. And before Wednesday, there was the build-up, and the anticipation, and everyone was kind of getting excited about it. But why are you excited? You're excited because of the potential jeopardy that it might not go your way. You don't realise that, but that's where the excitement comes from. If it was a foregone conclusion and it's almost just waiting for the day to happen, that wouldn't be as exciting. The reason it's exciting is because there's a chance it could go the other way, even if you don't want to admit it. And that's exciting. And nobody said this before. And I talk about the fun corner. That's why I'm investing, because it is ballsy. And I took a massive hit on Wednesday. And like I say, it wasn't pleasant. I was like, oh, that really kicked you in the knackers there. But, you've got to take the rough with the smooth. Yeah, and if you don't like it, you should get out. You're in the wrong game.
Oh, yeah. No, there are people who don't like it. I mean, it's trolls I've got quite a few people just blaming me for POLAREAN.
Well, that's mental. That's insane.
Yeah.
I mean,
because I was so bullish on it, and I'm thinking, I'm not the only one so bullish on it.
You're bullish about everything. Well, you're bullish about lots of stuff.
No, but the thing is, I'm not. But the thing is, I'm not bullish on to ramp the company to get others to buy it so I can sell. No. I genuinely, I mean, I said the reason I'm bullish, I think it has massive potential. And that's why I'm bullish, and that's why I own stock. And I'm not bullish because I own it. I own it because I'm bullish, on the stock. And so it's like I think there's huge potential. I still think there is. I mean, they get this. In fact, Richard, I'm trying to get him on the podcast, and he can't, of course, because he has to probably release some RNSs and stuff. And because they said they want an urgent meeting with the FDA. Jeff, meeting now. Okay. Get that luck fixed, Richard.
It's just the luck. The problem.
It's the last combination, very sticky. And again, it'll go back to where it was, But he can't do it. I think he has to. Oddly, he did say, to me, he said, "What I'm glad as I now can see the cards on the table. I know exactly, and I'm very pleased it's not efficacy and all that clinically. So that's a good sign." And I think now, because I said in the group there, in the channel, in a Discord group, and I said, I don't understand 75%, because if the FDA knock you back and they say you've got 5 things you have to sort out, and you can sort them out, then that's 100%. Because how else can they knock you back? Because you're not giving them any more new information to look at. So only the information they've been given is what they're judging you on, and they've given you these, say, 5 points, whatever. I don't know how many, maybe 3 or I don't know how many they are. But as long as you can sort those out, how else can they knock you back? So we've addressed those issues, done. What can they do from there?
Well, exactly.
How about the
luck? They've got a load of cash. It's not like, they need to go to raise to get through this next phase. They'll get through this next phase, and it'd be as little as 2 months, and who knows, a lovely Christmas present for everyone, and it gets approved. Who knows? But it was a big shock. Like I say, Brown Wednesday. I don't really want to go through that again, but I feel pretty good about it now. I'm happy I did nothing, and onwards.
Yeah, it's funny because Steve said, should my friend buy some? And thinking about it now, you probably should have, Steve. But at the time, it's amazing, isn't it? The psychology of the markets. The very fact is, when you want to run away from it, you shouldn't. You should be walking into it, And so, it's those opportunities when you get fear like that. It just scares you off, and that's the very thing. And that's what I mean by, Warren Buffett said, the time to be greedy is when others are fearful. And I think that's what Warren Buffett does, essentially. I mean, he will buy, undervalued stocks if you think undervalued, but he'll sit there with a tumbler of cash, wait for a general sort of recession, a big sell-off, and he'll start loading up. Because he realizes from those big fearful drawdowns, they'll always bounce. That's the way to get a good average, a good valuation. And I'd love to have the patience like that. He's playing the long game. He's 90 years of age, but being able to sort of sit there with a tumbler of cash. So I know it'll sell off. The market will sell off, and it will. Sooner or later it'll sell off, but it'll also bounce. But in that sell off, that's when you get the bargains. That fear is what you buy into. Fear is a buying opportunity. And
yes, absolutely.
And when everyone's bullish, that's not. That's when you.
But in this example, like I said earlier, I didn't want to put more money. I put in quite a chunk, and I'm comfortable with that. But even though it was a great price, I'm just happy to just do nothing and hold what I had. So that's okay.
Yeah, it'd be interesting to see where it gets now, because if they're going to, before there was unknown things, they've had the final result, the full answer. Like I said, a complete. Let's call it a complete response letter.
Yeah.
So they know exactly what to do. Now I'm thinking, if they are confident they have addressed these issues, and they go back to the FDA. It'd be interesting to see where the share price goes, because will it go to back where it was, or a little bit less, because there's a bit more fear about the FDA approval? But we know now there's more of a chance of them getting approved because they've addressed all the issues. So it's an interesting one, isn't it, really? Because they've got the cash and everything. So, yeah, I mean, people are going to be wary of the FDA. Maybe people take some money off. But you could also say, no, it's really nailed. It was nailed on last time, but now it's really nailed on. So
there was one nail missing, and now it's...
we've discovered... Yeah, oddly... Because the FDA, of course, have nothing to do with the manufacturing side, so that makes sense. Because they have, they were in collaboration with POLAREAN to set up the trials. They approved the trials, and the application they approved that, and that was based on the trials as well. So that was their part. And the thing we didn't see coming from was the manufacturer. It's some, one of their manufacturers obviously haven't got maybe their health and maybe their toilets are dirty or something,
Well, exactly. And the thing with efficacy and safety, it's not like, if the RNS comes out and says, they can't do that because your head falls off after 3 months. Right. Yeah. That's defunct technology. It then goes to the floor, doesn't it? The only thing I was thinking about, I had no stop loss in at all. But my experience of stop losses is, it comes bites you, doesn't it? Because you end up buying back in, and it's probably a higher price of loss. No, exactly. Well,
no, because there was one. Did you see that one day before?
There's a lot of people in the group said theirs didn't work in. So
yeah, but did you see before where
it moved so quickly, didn't it? So
yeah. Did you see a couple of days before where it went down? I remember where it was. It was I went to take my kids skiing over the dry ski slope. And it was very volatile for like half an hour before close, and it bounced back up. And it went down and took out some of the stop loss, 86 pence or something, and then just bounced back up and closed around £1. And I thought that's why you don't put... In businesses you're looking at, you don't do that, because if people want stock sometimes, it can be manipulated. They can see your stop losses, of course, because that's orders. That's to them, that's supply, So...
But the thing with
they can take him out.
I realised that we're all pretty arrogant and blasé about it, but there was still a chance that the FDA would come back and actually say there's something absolutely catastrophically wrong with the technology, like from a safety perspective or an efficacy, or and that would take it down 90%, 100% almost, wouldn't it? And I had nothing to protect me from that, so that's a bit stupid.
It's funny that. Yeah, but I don't know if you saw that. One of the guys, Owen, posted that thing, Motley Fool's site, talking about complete response letters and saying the difference is. And they said there were two big companies, Sanofi and another big company, were knocked back. It was a raft of manufacturing issues, knockbacks from the FDA on manufacturing issues. And they said the people who sold on that complete response letter lost, felt the pain because they bounced back up when they addressed these issues.
Exactly, yeah.
Because you don't know what it could be. It could be something really trivial. It could be like a health and safety certificate,
and like Steve says, like with the stop losses, there's no guarantee that they'd actually trip and work, actually, because it moves so quickly. I guess a lot of stop losses probably weren't filled, were they? I guess. So it's no guarantee anyway. So, but that's the name of the game, and going back, it's part of the excitement / fear of doing this. But
Well, I mean, it's if you want to earn massive capital upside, you have to invest in microcaps. Microcaps are never going to be a smooth, easy ride. If you want the reward, there's the risk. That's it. That's the volatility as well.
Yeah, and if anyone listening had a stop loss in at like 70p and has bought back in at 40p, I salute you. Well done. That's very impressive. But
Yeah. But who would have seen that happen?
Exactly.
I know. I used stop loss once. Before on Bidstack, when I used I checked a load in, say when I went to like 40 pence or something, and they came out with that thing. I thought, oh my god! And I didn't see it ever happening. But then I started tripping out all my stop losses, and and it went down even further.
Probably not a bad thing, to be fair.
Yeah. And they haven't recovered. So but it's odd because The thing is that's why now you adjust your strategy all the time. And someone actually asked me just now about Ilika, actually. He said, why I sold at Ilika. And I didn't realise, I looked at the Ilika share price just now. It's like 118.
Oh, is it?
I bought that at £1 last Christmas, you know? Yeah. And it went in, pretty much doubled over within a day or so. And so he asked me why I sold. And I think, well, you can break all companies down, small caps down, into two different areas. And the one is the hope, hype, potential stocks. You know, these are stocks that rise on news or the hype of the sector they're in. And the trouble is, though, when it's not sustainable, that rise. It's normally a pop and a drop. It may not be, overnight pop and drop, but if they can't support their valuation with fundamentals, invariably it comes back to where it was, And what I mean by that is, like, if you look at their valuation, and an easy way of doing this is just look at test Steve, enterprise value, and look at the sales multiple.
Oh yeah,
yeah. So and generally, for me, it's I look at a 20 and a 3, right? So it's 20% growth. You look at a growth at a reasonable price. That's GARP stocks, pretty much. So growth, I'm looking at 20% top line. That's revenue growth year on year, hopefully. And then the price you pay to get a good deal should be no more than 3 times. So the sales of, for example, if a company is doing 3 million in revenue, then you don't want them being valued at EV at 6 million with cash, because that's cheap. Then you get that, and it'd be nice but then it'll start growing. But if you look at Ilika, they are currently on 76 times, their valuation on their revenue. So they're 2.3 million, and they're worth 180 something million, 176 million EV because they've got 9 million cash. So you get market cap, take the cash off, add the debt, but they're about 176 EV. And they're 2.3 million. So I said, that's a very high metric, massive metric. The hype of solid-state batteries is built into that. Now, either they've got to, to become a good value, either they've got to, that revenue's got to grow massively. And in fact, if they are 175 million market cap, they've got to be doing about 50 million a year in revenue. They're nowhere near that. So either that or the share price comes down and the valuation, the market cap comes down, and so it's less of a metric. So, so I always be careful if you're looking at hypey stocks. Either you've got to trade them, or you just got to have a long-term view and believe in it, because it will be very volatile. And that's why you try and get good value, because it'll bring, it won't be so volatile. If your company's nearly valued at their cash levels, they're not going to be volatile at all, because that's their asset. You break it up, you can sell them off, and that's it. That's what they're worth. But when you get companies trading many times their sort of, sales, it's expensive. And they get very volatile. It's like the Teslas of this world previously were nuts. They're like I think over 100 times. In fact, one point I think several hundred times revenue. So you think, wow, because but you could say they are the leader, aren't they? Are they any good Teslas? I see them around, I think, and people rave about them. But I've heard some rumours that they're, I don't know, what's the rumour about? Are they any good?
I don't know. Yeah, I've heard mixed. Is there I've heard a little bit something like that about build quality and stuff.
They're not a great build quality, but apparently they're quite nice to drive, aren't they? Very fast.
Very fast, yeah. Crazy fast. The top models are incredibly fast, yeah. Like 0 to 60 in 3 seconds and stuff.
Anyway. So look at valuations anyway. I talked to James Trufin, guy.
Yes.
And fair play, do you know what? I like it. I like it a lot.
Have you done a podcast with him?
Yes, I did it on, in fact, today, Friday.
Oh, I haven't. Is that been published now? I haven't listened to it.
Yeah, it just came out. But worth listening to, because, the interims came out, and there's a couple of reasons it dropped about 20%. First of all, it's a very illiquid stock. So when people didn't like what they saw, started selling on the bell, there's the only way they can get some volumes through this, market makers, by dropping the price massively, And then hopefully some people will start buying it. For them, that's their margin of safety. They just drop the price massively, and they'll buy the stock off you for what they think is cheap, and they can shift it on. So they won't have a problem with it, and obviously move the spread out, so the spread becomes massive. So if someone's going to buy a 10p spread or something, or 10%, 20% spread, so they got a good margin there. But if you look at it, I went through it, and there were good results, and he explained why. The cash was quite heavy, chunky burn. He had 5.9 million. It's down from, 5.2, down from 5.9. But he explained why. And he said, when we started this company, we had 4 companies, all loss-making. Okay, but we've invested in those. That's what we do. We find these companies that we think can be market leaders in their fields, and we invest in them, and that's the point of this company. And then we take them then through to profitability, and then hopefully they become a point where we can sell them, And they've done that before, and in fact they returned £10 million pounds of cash to shareholders in 2019 from the sale of the company, and intend to do that again. But he went through it. He said, okay, so the revenue, was up. Let me just check the figures to get it right, so I'm not talking nonsense here. But interim results, he said, combined gross revenue for the group increased by 18%. This is for 6 months up to June. But he said, for high growth, I'm looking for 20% more. But they said, trouble is the comparison, first half in 2020, it benefited from interest income from Distribution Finance Capital, which is a company they spun out. He said, and that's, a one-off. He said, if you'd exclude that, then revenue grew by 28% over H1. So, and also PlayStack, for example, people saw PlayStack they went up 100% last year on their revenue because of PlayStack. Of course, they released Mortal Shell, which was a big hit, 500,000 units. And when you release a game, there's massive amounts of buys up front, isn't it? And then there's a long tail of sales. But the initial buying starts as soon as the game's released. So that just it's exclusive to that half. And so that happened in H2. And so people are sort of thinking, hoping us to do 100% again. It's not going to happen 100%. We're going to do 20%, quite comfortably. So PlayStack, he said, we've invested money into that. And he said, if we took our foot off the gas now and didn't spend on it and stopped investing, it could be cash flow positive right now, PlayStack. As it is, Auction is cash flow positive. Virtus is EBITDA positive, will be cash flow positive. So we started off with 4 companies making a loss. Already now 2 are, generating cash and will be generating more cash and growing very well over the next few years. And they're continuing that vein. And we've got 2 others, Satago, we've invested in because it's doing a thing with Lloyds, and PlayStack, and we're investing in that. So there's massive opportunities. And you don't, just try and... Our aim is to make them profitable, but at the right time, We've got loads of opportunity with PlayStack here. They've signed up with 2 big global sort of gaming companies. And so we've got to invest in it because there's a massive upside here. But Oxygen, which I didn't know about, and I didn't know how good it was. I was talking to James, and he was talking about this other company. But Oxygen is something that private equity love because it's. Let me just explain what Oxygen is. I'll get the actual hang on, the description of it. But basically, it does invoice payments for councils. It's the number 1 invoice council, software in the country. They got I think 100 councils on there. 90% of them have guaranteed the revenue for the next 5 years. It's like 5-year contracts. So the visibility on revenue is great, and that's what investors want. They've never lost a client, 100% client retention, and they're building clients every time. He said, now that, many people have said, that alone, Oxygen, underpins the valuation of TRUFIN. So discount Satago.
Oh, right, wow.
Yeah, discount Satago, Lloyds, and Virtus, that underpins it. And he gave me a comparison of this other company. He said, look at this company. I'm not going to mention who it is, but he said, similar, he said they are growing a bit faster top line than the Oxygen, but they're investing a hell of a lot into it. He said they're making a huge loss. They employ now 180 people in this company, and they're adding all the time. It's valued at 180 million, and yet Oxygen is a better business. It's better clients, bigger clients, more sticky, and they're now cash flow positive. And he said, and it's valued at what? We are valued in total at 50 million for the 4 companies, and we got 10 million of cash. So, so I'm excited about that. And PlayStack, and Satago, you're saying Satago, deal with Lloyds. If that happens, that's going to be significant. And in fact, you mentioned this. Here we go. December the 10th. That's the time when they'll get an announcement on Lloyds Satago, right? Is it a binary play? You mentioned this, didn't you? And I thought, is that a binary play?
Yeah. Are the FDA involved?
No, they're not involved. No.
Okay, it's fine. Right.
Because when you think about it, the difference is Lloyds are already using this commercially. They're using Satago. And of course, this was supposed to finish, wasn't it, in June, I think it was, the announcement originally on Lloyds Satago deal.
Yeah.
But then they extended it to 10th of June. They've extended it, and people thought, oh, that's not going to get done. Lloyds having second thoughts and all this stuff. And so, no, it is. It's just basically Lloyds are a massive corporation, and they've got so much compliance and so much red tape and so many people working there that it just takes some time. They are using it. And in fact, if you look at the interim results, which is quite encouraging, we scroll down there, and they announced that as well. They've gone beyond that relationship with Lloyds, gone bigger than they originally thought, and they're using it in more areas of their business. Where is it by?
Have they got any idea when that Lloyds thing will be announced?
Yeah, 10th, that's it. That's 10th of December.
Yeah.
That's extension.
I don't think Steve was listening a minute.
Yeah.
Oh, sorry, I missed that.
Yeah. So, no, it was supposed to end on the 10th of June, and they added 6 months extension to that. But they say was extended during June. We will update shareholders before the year end. That's the conclusion of the trial. As part of the partnership, Chicago is developing further integrations with the bank's infrastructure, driving additional reach throughout the bank regional sales network. Now, that doesn't sound to me like Lloyds are not happy with it, So they announced that on the extension. Some people just thought, they're not, Lloyds are interested. No, they are. And then they said there, now Chicago is in discussions with a number of other potential strategic partners, which could, if successful, result in additional growth for the business. Now, when you get someone like Lloyds on board, Lloyds is the biggest bank in the UK, pretty much, based in the UK there. That is like, a blue badge, a blue verification tick, for your company. If you hook up with Lloyds, so that off the back of that, I think they've just, other people, and even though it's an exclusive deal with Lloyds, different parts of Stargo, and so we can, hook up on different parts of it with other companies, so it's fine. So I think have a bit of patience here. I think it's undervalued, and the good thing is Arrowgrass, the fund that owned 73% initially of TRUFIN, they're now sold out. They've sold out to institutional holders. Now, why are institutional holders, really good, clever institutional holders, why are they buying TRUFIN shares at 55 pence? It's only 62.5 pence now, and it's risen like the last 2 days. But why do you think these guys are buying this company at this level? It just
they got stock they sold from POLAREAN.
Yeah. So you got to look at that and think, okay, if they're buying it at 55, you're never going to get the same price as institutions, right? It's now at 62.5. I'm happy with that. If you're buying it at this level, I'm happy with a little bit of a premium to the institutions, because they can't, and they're not going to jump in and out. These guys holding big chunks. You can't jump in and out. They're there for a couple of years, and I think give TRUFIN, a year or so. In fact, I think next year's revenue is going to be H2. It did say, in fact, auction, by the way, they said the reason why H1 didn't knock it out of the park, even though if you look at it, like-for-likes was 28% up. Auction, because it's dealing with local finances and councils and stuff, there was a problem with COVID because, of course, there's lots of furloughs and all that stuff and deferments of payments to all the clients and all that stuff. So they did take a massive hit in H1. But even so, there was still EBITDA positive. They've been out 5 quarters of EBITDA positivity, and they're going to be cash flow positive, and they're still increasing H1 by 6%, even though that was it took a massive knock on COVID. So he said, honestly, this will start moving now. And he said it's like a bit of tanker. They've got long contracts, so 100% retention on those contracts. All you do is like a flywheel, just keep adding to them, and they'll last for ages. So he's I did sort of worry over the interim results a little bit. I thought, oh my God, what's happening there? It seems to be cash has gone up, but he said the thing is, if you look at it, H1 now they've got 2 companies now generating cash now and going into H2, so the cash burn won't be as much, and they're all growing. Yeah, I like that. It's fine. I'm happy with that. I mean,
just sit and do nothing.
Yeah. Anything else? Anything else, Jerome?
No, I don't think so.
Shall I go through the entire podcast without mentioning,
Yeah, the E word. Mm-hmm. Word. Yeah, the EH words. Yeah. Let's do that. Let's make a change.
Yeah. I can't.
You can't bring yourself to, got to mention.
No, do you know what? I posted a thing, a tweet, a thread of escape hunt, and I thought,
I saw that. Yes,
a lot of people having a go at me, because of POLAREAN. I just say idiots. It's really, they're all these trolls, right? They're all faceless wonders, They've obviously got an issue. I find very rarely, in fact, hardly ever, will you get a person whose real face, real name on the Twitter account having a go at you. It's always some kind of cartoon face with a stupid made-up name, or some stupid picture. Thinking, you be yourself. And if you were actually yourself on Twitter, you wouldn't just say silly things, hit and run, right, idiot, and run off, you know. It's like, it's the equivalent of cherry knocking, you know, or knock down ginger. What do you call it? Cherry knocking or knock down ginger?
I don't think we were born
I've never heard of that.
We weren't born in the 50s.
You've never heard of cherry knocking?
No.
Or knock down ginger?
No, what are you talking about?
Where you knock
Is that like a World War II game or something?
No,
Are they porn stars?
People are listening. Can you believe these two? You knock the door of someone and run off the front door and just run off.
Oh.
As kids. Have you ever done that, Fred? Fred didn't do. No. Steve, have you never, as a kid, knocked someone's door and run away?
No.
God, what an exciting childhood you had.
Well, you know. No, I haven't. No, I'm just.
Well, do it now, Steve. It's never too late to have a bit of fun in life. Just go on, just run up your neighbour now and just knock the door and run back in and shut the door. I would love that, yeah. Steve.
Problem is, he's got a ring doorbell though.
Oh, yeah, exactly.
Yeah. Just wear a balaclava. Just run away, bing bong. Or just wear a mark.
But he'll see me running back into my house.
I know. You imagine if he didn't know that. And he said, he comes the next day, Steve, do you want a quick word? Yeah, go on. Last night you rung my bell.
And then legged it.
No, it wasn't me. Yeah, they got it in the camera. No. Oh, listen, my brother popped round. He's a maniac. He's an idiot, that guy. Yeah. Really is childish. I'll have a word with him. He's an idiot. More an idiot.
As you're wearing the same clothes.
Yeah. He borrows... He's wearing your hoodie and your jeans, Steve. No, he does that. He nicks my clothes, puts them on, knocks door. He's nuts. He is nuts. He's nuts. That's why he's...
We could tell it was you, Steve, because you took off your balaclava so you could see the doorbell.
We're twins. He's gone abroad now, actually. He's got the plane. Sorry.
Ring doorbells would destroy the old Ching Chong Cherry Man. What was it called?
Yeah.
What was your game called?
It's called. We used to call Cherry Knockers. Don't say that.
That is a porn star.
Yeah.
Speaking of games, have any of you attempted to watch Squid Game on Netflix?
No, I've heard a lot about it, but I mean, people
God, it's the worst thing I've ever watched in my life.
I went to look at it the other day. Do you know what? I was going to say, Steve, do you know what's helped me this week? I did start off watching, right, Drug Lords, because it suggested to me when you start running, you just want to pick something quickly, you know, because just trying to run and just flick around is annoying. But because of what happened this week with the markets, I thought, I don't want to watch this anymore. It's too dark. Do you know what's helped me a lot? And I suggest any of you, if you listen to this podcast and you've had a bloody hard week in the market, and I salute you if you are a new investor and you've made it through. You're underwater. You're still holding on to your stocks, because this has been a really hard year. It really has since second quarter. It's been mentally just really draining. I found really grinding lower for weeks. And I've been investing for 20 years, and I found this very hard. So if you are managing it, well done, because it will get easier. Honestly, it's not always like this. It's nuts. But anyway, what's felt me is I switched from Drug Lords to Jerry Seinfeld.
Okay, yeah.
I saw it advertised on there, all the Seinfeld shows. I watched that as a kid. But oddly, because all the Seinfeld series are now on Netflix, but oddly I didn't put that on. I couldn't get it on. So I put on just one of his stand-up routines, which I really liked about getting married. And also, I don't want to say what he said, because... Was it which comedian said, when you get someone trying to tell another comedian's joke, it never really works out, it just doesn't sound funny to anyone else, and you try to explain it in a humorous way. But anyway, there's this routine about being married and all that. It's very good. And then I put on Coffee, Cars and Comedians, which is this drive round talk. He's very sharp, and I like it a lot. But if you are down, put on a bit of comedy that you really like, a comedian you like. You don't want a comedy that's rubbish, because you get on there and you think it's not good. But I literally was running and laughing last 2 days at Jerry Seinfeld, and it really helps. Laughter is a good medicine. Exercise actually and laughter, two things there that really get the serotonin going around the body.
Yeah. I think the biggest thing for me was just like stepping back and looking at a bigger picture and a longer window. And it's not about this week, is it? It's about like Steve said earlier, come back to me in 2 years' time. Like log out and come back in 2 years.
Genuinely, as I said earlier, it just did not bother me at all. I think I don't know. It's just, I think out of some of the stocks we've been in, when you get bad news, you just go, well, this isn't probably the worst that's probably could happen.
No, and do you know what? Generally, all the time, the problem with us as investors is we think too short term, you know? And like this, in fact, I'm going to answer this guy on Twitter. In fact, I'll have to mention ESC, because I talk about, I did a bit long thread on escape hunt. I didn't want to put it out there because I'm sick of the trolls just having to go. And in fact, I blocked most of them, so I'd put it out there anyway. But what I put is a disclaimer, you know, and I'll say below is a thread on escape hunt. It comprises actual reported figures, my opinion, and my projections based on those figures. And I say past results are no guarantee of future performance. I hold the stock, so please do your own research. This is not intended as investment advice. And I just go through it explaining, you know, their growth. And I think the interims are amazing, I thought, compared with the hand they were dealt. 6 weeks of trading, you know, is really good. And I think I went through it all, being going to cash flow, you know, EBITDA positive, cash has gone up. They've increased the sites. In the periods they had, it's gone up 65% compared to 2020. And if you extrapolate that out, you get 5.89 million this year. Amazing when they were shut for like 5 months a year, which is 20% bigger than 2019 when they were fully open. You know, so they've grown this year, and they haven't been open for 5 months a year. You know, but I talk about EBITDA and all that stuff. And this guy did say, but what about profits? You know, and cash flow positive rather than EBITDA. And I thought, no, these are startup companies, you know. They go through, they're loss making, and hopefully, if they do it right, they get the stuff point where they break even, you know. Then they get the EBITDA positive, which is a proxy for cash, it's cash generation. Like I say, in earnings before interest, tax. I mean, companies making losses don't pay tax anyway. Yeah. It's not relevant. First of all, earnings before interest. There's no interest. They don't have debt. So there's no debt. Nowhere of that. So it's irrelevant. Also, before tax, they don't pay tax. They've been loss-making, you know, and amortization, which is a non-cash charge, and depreciation. So essentially, it's a proxy for how much cash they generate. So they start with that, and then they've got a cash flow positive, then profitability. So they're on the way to that. So they always said they're going to get to 15 sites, and they to start generating cash. And they are. They said that, and literally, they're nowhere near where they're going to be. So to explain to that guy there, I think it's John. They will get the next thing is profitability. They are there on a cash level, profitability, but on an operational level, they will get there in the next few sites, and I think they're growing. But no, just saying, you know, long term. I did say something like that. I think sometimes focusing on the longer term helps. You know, always thinking, where's this company going to be in 5 years' time? Just sit back and do nothing. It's a little bit different with Polarian, though. I mean, because you know, at the start we didn't really know how serious it was. I thought, you know. And then we realised, in fact, it's not that bad. Actually, it's not as bad as we thought. It's not an outright rejection. It's a rejection with conditions, and those conditions are not serious conditions. So then, But generally, look at that volatility in the market. Right, it's normal. And I tweeted this. Look at this. Even for big winners, big stocks, from peak to trough, Apple has lost over 70% of its value 3 times during its stock's history. Amazon has fallen by 90%. Facebook lost more than 40% of its value during just 2 months in 2012. So, and it does come down to emotions. At the end of the day, it's all about it's a mental game, isn't it? Like you mentioned, Peter, about I think Vadim selling. So did he sell? You were surprised with that. And he knows a lot more than anything else. But when you get like that, you panic and emotions take over. And it's all about emotions. And I said on Twitter, most private investors have access to the same info and opportunities, and yet some make money whilst others don't. Why? It comes down to emotions. So observe your emotions during volatile periods and ask, am I thinking or behaving rationally? And I said, focusing on longer term usually helps. And it does, doesn't it? Think, like Steve said, but pretend you're dead, you know?
Yeah.
And generally, you outperform a living you and emotional you all the time because you make rash decisions. The worst enemy is not the stock market; it's yourself. It's your emotions.
I think that's a good note to end on. Pretend you're dead.
Yeah. One other thing, just any TV recommendations apart from Jerry Seinfeld? I quite like that. And anything you watch, boys? Steve, you mentioned Squid Corner. What was that? Squid Fun.
Squid Game. I wouldn't recommend it, but all I say, if you start watching it, you probably will
want to watch the whole thing. It's one of those addictive things, but it's terrible. It's awful.
Someone said to me earlier, just bring it back in the stock, saying, shouldn't Gfinity get something related to Squid Game, whatever it is? And I thought, I saw it was suggested to me on Netflix. I didn't watch it because I can't be bothered with this. And then, what is it about then? Like a game, it's a killing game, isn't it? Something.
Yeah, so it's a South Korean show, so it's dubbed, or you can watch it in South Korean.
That's why I didn't like it. I can't run and read text on the screen.
Well, no, it is dubbed, so it's really badly dubbed in English. But but it's about these people who go into these games, and if you lose, you get killed, basically. And that's pretty much what it is. But the games are quite good, actually. So it's kind of like, I think that's probably the interesting part about it. Actually, is the anticipation on the games, but.
All right.
Yeah. I think I'm just going to look up Cherry Knockers films and see what they're like. Yeah. She sounds good.
Yeah, I wouldn't recommend it, as I said.
Okay. Cherry Knockers. Yeah. So, do you know what? If in doubt, like I said, just pretend you're dead. Do nothing. Pretend you're dead. Okay. Honestly, it takes a while to be convinced by companies. I'm now, pretty much convinced by the companies I hold the high-fi conviction stocks. I'd like more news on Biome. Because they're quite quiet, but hopefully it's going ahead. But it's it's cheap. It's literally 15 million market cap, and and the revenues, it's good. So but Gfinity, Escapement, definitely POLAREAN tech is amazing. If they get that approval, which I think it's more likely than not now, because it'll come down to something trivial like Chuck and Jeff went to go to the toilet in one of the facilities, and there was a number 2 in there. Oh, no way. There's a big number 2 in there. Okay. Chuck, we're not approving this. It's disgusting, man. Disgusting. Flush the chain.
We got a floater.
You got a floater. Knock it back. We're not approving this. No way, Chuck. And they try to flush the chain. The chain broke. It broke the chain. What's wrong with you guys?
Not on my watch. I'm not approving this on my watch.
You got a faulty lock. Need some WD-40, and then you got a big floater. What the hell's going on here? That's what it comes down.
We could have left it on a high, but we went a little bit further.
That's better.
We left it on a low, and number 2. Number 2 doesn't get a lot lower than that. Well, number 1.
God bless Chuck and Jeff.
Yeah.
Right.
Cheers, guys. Speak to you next week.
Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.